Good morning, good afternoon, good evening, depending on what part of the world you're in. I am Kevin Koyman. This is the Venture Outfitter. We're going to go ahead and get things started. Today is another Venture Outfitter Weekly. What we're going to work on today is be talking about financial statements. I've got a few slides I'm going to go through just to get everyone oriented as we have a number of people that are hopping into the studio audience. Thank you for being here today. We're here at the Venture Outfitter. Venture Outfitter, around the Tech Ranch, we have a community of practice that is here to support each other as we're building our businesses around the world. So thank you for being here today. I want to thank very quickly our studio sponsor is DualWorks. DualWorks is a co-working place based in Austin, Texas. Linda Blackman, who is a long-term tech rancher, she was involved in Venture Force 17, which we're now beyond 50 cohorts. She was involved early on. She runs this place, and make a long story short, the nice thing about this, if you're considering a co-working location, is if you need a closed door office or co-working, or even just a mailbox for some of the people that are international, this is a great place to leverage. If you are looking for a special configuration or something like that, let us know. You can go to techranch.com/DualWorks. And if you mention that you're involved in the Tech Ranch, you will get lower prices just because Linda really caters to our needs. So thank you for that. Thank you to Linda and her team. The other thing, really quick commercial. So we had been holding off. We've been inviting a lot of people into the community site, and the community site is free. You can go to techranch.com/connect and, sign up for the community. But we're now actively driving our community of practice. Whereas if you're working on your elevator pitch or you're about to come to Austin and you want to get involved in the most basic type of areas or something like that, if you want to get feedback on your investor pitch and participate in our office hours, we have a really inexpensive program called the Venture Outfitter. It's actually the actual program around this, where we'll go through the venture essentials classes and different places like that. This is now up. I haven't been mentioning it a lot because we've been working with a small group, but for $49 a month, you can gain access to the additional vendors that are available through Tech Ranch. Like, there's a lot of special offers that, because there's time associated with that, we try to give you the community area for free. But if we're getting special deals from vendors and stuff like that and sponsors like that, they require activities, and my team members want to get paid for their work. And so there is a small charge, but we try to make it really accessible. $49 a month, you can get involved in the Venture Outfitter program. If you have any questions or if you have any problems signing up, let us know. Now, if you're heavily involved in the Tech Ranch community, I also want to mention this, is we do have a number of people that are actively driving different parts of their volunteering around specific areas. If you're doing that, you also get access to this. So for the people who are really doing not just a little bit of volunteering, but there's a number of people that are driving, we have an ed tech lead, we have a mental health tech lead, we have a health tech lead. Those people gain access as well. Part of what we're trying to do is support the community of practice with this, what you might consider a gym membership to get involved in. All right, we'll talk more about that. If you have questions, let us know. There are two big series that are coming over the next few weeks. I'm going to, on the next slide, I'll actually give you specific dates. But because there's a lot of people, more than 50,000 people are coming to town for activities like South by Southwest, and there's a lot of other activities that are happening around here. Over the next few weeks, part of what we're going to do is focus on building Austin, and what is it that you can do to leverage Austin for building your business. That series, I'll talk a little bit more on the next slide. The other thing that I want to make sure I signal is there's another company that got built. I'm one of the business partners behind it, called Venture Connections. That's all about the supply chain and what's happening with the realignment of the supply chain. A lot of activities are happening that are bringing a lot of manufacturing jobs back to North America. And since many of you know that I'm very pro-Mexico, Part of what this organization is doing is supporting more relationships between the United States and Mexico. It happens that we also have activities that are happening between Germany and Hungary. And there are other countries that have asked if they can get involved in these new supply chains as this realignment is happening. We will have a series about that. You're going to have to stay tuned. We were going to do some of it over the next few weeks, but some of our speakers are not available for several weeks, and so it might be after after March 15th when this really kicks off. Now, that being said, if you and your business is somehow involved in a supply chain, or especially around OEMs based in the United States, you should get involved with us. Let us make sure that you're on our radar, because we'll share more of these type of details with you. And there's some other stuff that's already happening there. All right, so here's some of the coming soon type of activities. And a lot of this is focused on startups that are coming, or entrepreneurs that are coming to town during the March 10th through the 15th phase, but they want to get a little bit prepped for being here. They're actually coming for one of the conferences like South by Southwest or one of those type of things. February 16th is going to be why Austin, what makes Austin special, and how to connect here is the topic. We'll talk about that. We'll have myself plus a couple other speakers about how to do that. February 23rd, how to explore the U.S. market before you enter. Now, this whole notion of exploration, a lot of companies make the mistake of doing market entry and they hit the wall versus doing exploration. Even if you're already in the United States, this will be applicable information for you about what's the strategy you should use to test and tweak and test and tweak and test and tweak. That's what we'll talk about on the 23rd, with specific other ideas about how to prep if you're outside of the country and you're looking at the US. I'll go through some details about how to do that. March 2nd is Texas's birthday, so we're going to say happy birthday, Texas. Doing business in the Lone Star State, and we're going to have someone from the Texas government, as well as one of the organizations that TechCrunch is partnering with. There's a new guy in town named Mark Cervantes he's got a company called the Q Branch that TechCrunch is partnering with, or I've been working with side by side a lot. We're going to hear from him and a Texas government person. We haven't finalized the confirmation about the Texas government person. More than likely someone from the Secretary of State's office. And it's even possible that we'll have the former Secretary of State, just because he said yes. And I want to make sure I confirm that. That's on March 2nd. March 9th is going to be the suggested itineraries for Austin for March 10th through the 15th. There is going to be a lot of activities, both around South by Southwest, as well as a lot of non-South by Southwest activities. And we're going to say, hey, if you're here, this is the Thursday before all the craziness starts. That will be a great time to say, and even if you don't have a badge, if you're not participating in South by Southwest, this will be a great time to say, hey, I kind of want to know, how do I take advantage of it? Now, a lot of you won't be coming to Austin during that time. And so we'll talk about the different things you can plug into to take advantage of this from a distance as well. March 16th, this will be after all the craziness. It's actually in the middle of the South by Southwest Music Festival timing, which we're not, just to be very clear, TechCrunch is not an official partner with any of that. I just happen to be someone that's been going to South by Southwest for 15 plus years. But part of the thing that I think is important is to learn how to integrate what just happened in the craziness of South by Southwest. And that will be on the 16th. And typically that's actually the day that I sneak away and disappear. But right before I disappear for a little mini vacation, we'll have that time. And then March 23rd will be live from Lithuania. And, get out your concert t-shirts again. I'm going to go on the road. I'll be in a bunch of different places. I'm confirmed for speaking on the 23rd and the 24th in Vilnius, Lithuania, at a conference called Ekonomikos, which is the Davos of Lithuania. I spoke there 5 years ago, and I'm really excited to get to go back. especially the thing that I think will be interesting, and I'll more than likely linger in the area of the Baltics is possible, that I'll get to be in the we're working on some Central European activities as well. But with the war that's happening in Ukraine, I think it's an even more critical time to be building relationships with countries like Lithuania. And so I'm real excited to go back and do that. If you have any questions about these events, if you have something you'd like to add to any of these events, let me and Jello know. And if you don't know how to get a hold of us, but you would like to say something, you can always send an email at start@techranch.com and you will get our attention. Jello manages the first bound about that, but send it to start@techranch.com. And if you have something that perhaps you have something that's aligned with what's here, or your startup, you'd like to actually have a pitch or something like that during one of these times, we'll have time available for that. Let us know any questions, and more details will always be published on the techranch.com/events. So take advantage of that as well. All right. So what's happening in the world? This article just came out about the 20 biggest tech layoffs since 2020. And if you notice on the graph and that little QR code, if you want to read this article, I really like what Visual Capitalist does. This is a great newsletter to be signed up on. They're talking about the layoffs. We've all heard about the impending recession, and I think the recession is essentially here. There were a number of layoffs, Uber and all sorts of different organizations coming along, but all of a sudden, here it is in January, and we have quite a lot of layoffs that are happening. Visual Capitalist did a really great job on this article. There are 3 different graphs that you might look at. I didn't put all 3 graphs on here because you can take homework if you'd like to look this up. But the main thing about it is, you've heard the expression, history doesn't repeat, but it rhymes. We're at a period of time that I hear some rhyming going on. 2008, 2009, when we kicked off the first series of the program that was called Venture Forth, is really interesting. There were, I remember standing in front of a group in Cedar Park, Texas, and of people who had just been laid off. And there were actually lots of engineers. Engineers are not used to being laid off. It was really interesting about what was happening, because I was really surprised, because engineers are like, dude, we're not supposed to lose our jobs, but we just did. And this was actually some of the period of time that we started those activities about it. But what should we say about this time in history is, it looks like we're entering into a true recession. These large companies are signaling this because they're jettisoning people by like mad. But I want to make sure I say to the startup entrepreneurs, this is an interesting opportunity for us. There's going to be a lot of gnashing of teeth, people losing their jobs. There's nothing fun about that. There's nothing fun. There's nothing great about it. And the, over the top economy that we had, or the, with all the investment, especially that happened in 2022, investors are going to be cutting back, which they already have. Large corporations are cutting back, which you already can see they have. But there's usually really interesting opportunities in recession for entrepreneurs. And we'll have more after the middle of March. We'll have more activities where we talk about this. And this will be one of the themes that we'll be talking about how to take advantage of some of these situations. In my world, since I've always been an innovator, and since I grew up in the ranks of the innovators, and I've now dealt with this is my 3rd big recession in my entrepreneurial career. This is actually the time to innovate. This is the time to innovate. So we'll talk a lot more about that. And I think we'll have a little bit of time after Eric speaks today to talk about this, but we'll certainly have more conversation going on the community site, which is community.techranch.com. And it's an important time as well to remember some of for those of y'all that have been long-term around TechRanch, I talk about the venture value of death. That is like where, you're bleeding money and all that sort of stuff. And it's really kind of rough because customers aren't going to say yes as fast. And, investors are not going to say yes as fast. This is the time that the social capital that we have as entrepreneurs working with each other, this is our time. This is our time. And this is where this community of practice is going to be even more valuable, because a lot of times you might not have the money to go hire that vendor, but us as entrepreneurs, we can take risk with each other and go to market together. And there's some things that happen only in these times that the dynamics of this is a great time to be in a startup. It's a harder time in some ways, but it's a great time because during these type of environments, people that have access to lots of capital aren't going to be throwing it around as much. They're going to be much more conservative, which means that as a startup entrepreneur, you're not up against the crazy, here's someone just threw $100 million at a space. It doesn't happen as much. It will still happen, but it doesn't happen as much. So we'll talk more about that. But if you're interested in looking at this document, make sure you check out the QR code, and we'll have a link to the actual doc in the show notes for today on the YouTube channel, and also in the private area on the website, on the community site. Okay, well, most of you came today to hear about Eric Weynand and what he's doing with how to read financial statements. Who is Eric? So Eric has been a long-term friend of mine. He's helped me build a bunch of businesses. He's actually held my hand through one of the hardest downturns in my career when I actually had a business failure. But he built a business. He built a business that essentially helps getting access to a fractional CFO. Now, you might have heard of, there's some really high-end CFO services. And if you have a lot of money, you can go to these other services. But what he's done is he's actually made it possible to engage CFO services at a much more accessible way because of how he's built his team. And we're going to hear all the details about him. But Eric and I were getting to reconnect, and I was like, Eric, I need to be learning more about financial statements. So even if you're just presenting to me, it's always this, the finance part. There's investing, finance, product, the marketplace and stuff like that, sales, stuff like that. Finance is always something where I know that I have something to learn. And so I'm looking forward to getting to learn from Eric. I always do every time we get a chance to talk. Eric, why don't you come on and actually, before we even have him put on his slides, Jello, go ahead and have him join so we can actually see him together. Perfect. Hey, Eric, welcome to welcome back to the VO Weekly program. It's great to see your face. You're in Uruguay right now, by the way, too, right?
I am. Yep.
Yeah, so we originally met in Austin, but one of the things that Eric is an expert at as well is he's built a really diverse team, leveraging all sorts of different parts of the world. So Eric, let me just get out of the way and actually have you kick it off, but tell us all about a little bit of history and then get right into it.
All right, awesome. Yeah, thanks for having me, Kevin. I appreciate it. So Kevin and I met in 2010 when I moved back to Austin from Uruguay. And I ended up here because I did an internship while I was doing a master's in international affairs. And I worked for an NGO that helps entrepreneurs called Endeavor here in Uruguay during that internship. Why am I here again? Well, I met a girl during that internship, and the rest is history, like so many stories that you hear. So I spent 2 years here. We were back in Austin from 2010 to 2015. And we've actually been in Uruguay since December 31st, 2015. We moved back down here. We've got 3 young boys, and we are putting in our time with my wife's side of the family. And it's been a great experience these 7 years. We just moved to a different city last year. We're in Punta del Este now, which is a little bit bigger than the cow town I spent 6 years in leading up to this. So that's my little personal history there, how I'm here. And I started the business when I was moving down here in order to provide outsourced finance and accounting services to small and medium businesses, because that's what I did in my career up until that point. And I found that it was a pain point for so many SMBs that they couldn't solve this problem of how do I track, record, and report my financials in a way that helped me actually run the business. And I did that work for the company I was at prior to starting PlotPath. And I said, every SMB needs this. And so that's the mission I've been on since 2015. Here we are, 7 years late.
It really is. I mean, I know that as we get our businesses off the ground, as we get our startups off the ground, that when you really start having to put some kind of financial controls and accounting controls and getting all that all together, yeah, that can be a real pain. So it definitely is really powerful to have. So thank you for doing that, as well as thank you for the time that you did it for me personally across our businesses and stuff like that.
Yeah, absolutely. And it was, the Tech Ranch was such a good introduction to the startup landscape and the venture landscape in Austin and in general, that worked with a lot of entrepreneurs there and had some great experiences and some great learnings. So, so I mean, I won't go on too much. Let me find the share button. Where are you? There we go. Screen 2. So let me share here, and I've done plenty of marketing. I mean, I won't do too much more. You guys are here to learn, and so I try to focus on that. And so what we're going to talk about is how to read and act on financial statements. Let me jump to the real quick thing about us. So most of this we've kind of covered. Today we're a team of 15. 10 of us are in the US. We actually have 5 people, including myself, here in Uruguay. We serve a little over 75 clients monthly, where we do their monthly accounting and financial reporting, and including accounting operational aspects like AR, AP, payroll, and then financial planning analysis and fractional CFO services like Kevin was talking about. So that's a little bit about us. And then let me jump to the fun and interesting part. It's going to be pretty informal. It's going to be short, and I'll leave time for questions that anybody has and want to guide the conversation in any direction. I'm very open to that. I spend a lot of my time learning about businesses from business owners and talking with business owners and explaining some of these issues to them. As you can imagine, for working with SMBs, we work with business owners with all different levels of financial and accounting acumen. And so I think that I've developed an expertise in distilling this information in a way that's useful to people regardless of their formal accounting or finance instruction. So that's what I'm going to try to do here. It's going to be fairly high level and surface. We'll go into some of these concepts, and then, like I said, in a Q&A, we can go as deep as you want to go on particular issues. Happy to do that. So the point of the conversation is how to read financial statements and take action based on them. Well, obviously, financial statements are just reporting certain financial metrics of your business. And so that's where I want to start is, well, what are the financial metrics that you need to be paying attention to? And then we'll talk about what statements they're actually on and how to read them and what to do about them. So when I talk to business owners, and I'm kind of going from zero, like they don't have a lot of finance understanding, they've never managed their business from a managed by the numbers perspective. You know, so many business owners, I'm sure you guys that have run businesses or starting businesses know this feeling of I don't have all the information that I want. I'm running the business based on my gut feel, based on how much is in my bank account, based on what my payroll is next week and whether or not I can make it. businesses that are small and starting out kind of run that way until they get to a certain scale where they've got some continuity and they can implement proper finance and accounting procedures to create financial reporting with metrics like these that you can monitor. So that ought to be where your head's at, is as I grow and scale my business, I want to make sure I have the right accounting software and accounting procedures and people in place to start to run my business by the numbers. And so when we say run my business by the numbers, these are the 5 numbers that you need to look at every single month after you complete your accounting and close your books and say, how am I doing across these 5 metrics? There's many more, and we'll talk about them, but these are ultimately the ones that determine the financial performance and the success or failure of your business. So net income is number 1, probably fairly self-explanatory, but maybe not everybody knows exactly what it is. This is all your income. It's all your money coming in from your customers or clients, minus all your expenses, all your costs, direct and indirect. And this tells you what was the profit of my business. Sometimes it's called net profit. So this is typically where you want to start. How did my business do in this month, in this year, in this quarter? And then you're going to work your way backwards to answer why. Why is it what it is? And we're going to look at some charts and graphs here and talk through this in more detail. One point I always like to make to business owners is that cash flow is of equal importance to net income. And net income is of equal importance to cash flow. Everyone wants to say cash is king and those kind of things, or where do I start? I tell people you can't run a business without knowing what each is and monitoring both regularly, because cash does not always equal profit. So if you're just focused on net income alone, you might end up in situations where you're running out of cash or you're short on cash, a cash crunch situation. Or you might be in the opposite scenario where you're flush with cash, but you're not monitoring your net income, your revenue and costs, and you don't know what your true profitability is. And though you feel like you have a lot of money because you're looking at your bank account and there's a lot of money in there, you're going to go hire and buy lots of stuff. If you're not monitoring the ingoing and outgoing income and expenses of your business and monitoring net income, you're gearing up for a potential problem, a train wreck. So give them equal importance, net income and cash flow. When it comes to cash flow, you're going to look at it kind of relative to your net income. Well, did I generate more cash than my profit or less cash than my profit? And why? These are adjustments on your cash flow statement, which we'll look at here in a second. So now you have the bottom line numbers. From there, I typically encourage people to go, okay, well, that's the result. Now think about the why. Okay, what happened on the top line? Revenue. So you talk about income, top line, or revenue, kind of interchangeable terms. And you want to think about, all right, well, was it higher or lower than last month or last quarter or last year? Was it higher or lower than my plan? That's your starting point. And then you want to break it down by line of business, product, customer, project, whatever the breakup of your business is. After you make sense of your revenue, we'll then go to your gross profit. Well, was my gross profit higher or lower than budget last year, last quarter? Same exercise you do on revenue. And what was it relative to revenue? Well, my revenue was up quarter over quarter, but my gross profit was down. What does that mean? That obviously means that my margin percent decreased, right? I sold more stuff, or at least at a higher total dollars, but I didn't have as much gross profit to pay all of my overhead expenses. What happened? My cost of sales went up, and that's a potential issue. I need to dive into that and figure out why my margin percents were decreasing. And then so once you make sense of gross profit, below that are your expenses, your overhead. And you want to see how that breaks down by your different departments. So we use this terminology, and that's because it's pretty standard across accounting, across industries, of general and administrative expenses, sales and marketing expenses, and research and development expenses. So it's important to break up your overhead into departments like that, so you can track spend by department. And then you'll look at your personnel costs, your facilities costs, all these other examples here, to see how they're trending over time. And it's useful to look at them as a percent of revenue and gross profit as well. All right, so that was just a quick overview. Let me jump to how to read the financial statement itself. When we do this work for business owners, when I talk to business owners, I tell them that these are the 5 key reports that they need to be able to produce from their business and run and look at least monthly. So maybe this is obvious and self-explanatory, but I like to start here that you want to look at monthly your profit and loss, your cash flow, your balance sheet, your accounts receivable, and your accounts payable. These are the reports that are going to tell you those 5 metrics that we looked at, and at least to give you a starting point as to the why the metrics are what they are. So this is a cut and paste from the financial reporting package that we'll send to our clients monthly. And you can see in the top left, it's got the table of contents, and it's just these 5 reports. There's 14 reports here, but we just split it up into summary, simplified views, detailed views, year to date, and monthly. But it's these 5 reports. Just to show you where these items are on your report, why these are the key reports that you want is because these have the 5 metrics that we were just talking about. So when I pick up a P&L, a profit and loss, or an income statement, I go through that exercise that we just talked about on the last slide. So I start with metric number 1, which is net income. There at the bottom of your P&L. And so that's your net profit. After all of the activity in my business during this period, that's how much I have left over. From there, I say, well, what happened with cash? And so that's in the accounting world on a separate statement, which is your cash flow statement. That's why it's the second one on the list here, and then the one that you want to look at and give equal importance to relative to net income. And so I'll go to cash flow, and I'll notice in this case that, okay, net profit was 8.6K, but cash flow year to date is 20K. So obviously I have some goodness in my cash relative to my net profit. So I want to be aware of that, figure out what it is and why. It's nice when you have goodness, when you have upside. Oh, I generated more cash than I actually did profitability. That's great, but it could flip around on you. So you don't want to just put that in the bank and move on. You want to understand why that's the case. And then from there, we go to metric number 3, which you see there on the total income line. And we think about our top line. As you can see here in this report, it compares it to prior year, and it shows you $1 and a percent change. And then you would go to gross profit, and then you're going to be down here on your OPEX after you make sense of your gross profit. You can see in this report, we show dollar change, percent change, and percent total income. So the point of this slide is to show you where to find these metrics on your key financial statements. And so when you pick up a P&L and a cash flow, this is where you want to look. You want to know what those numbers are. You want to think about them relative to trends, to prior month, prior year, prior quarter versus budget, that kind of thing. I'm going to jump to, go back one. This view here. Move this little sharing thing out of the way here. So these are essentially the same metrics that we're just looking at, the high level ones. This is a financial KPIs report that we'll prepare and send to clients on a monthly basis. And it just kind of drags all that information onto one view. And so when this is to facilitate and simplify your analysis. So you're reading and acting on your financial statements. A graph like this is helpful. You don't need it. You can use the financial statements themselves, as you just saw. So you can see here, you've got all those same metrics from your P&L and your cash flow brought to the forefront here for you to monitor. And so when I talk about, all right, you want to be looking at this relative to trends, that's what the comparisons here are to the right. So let me compare this to my budget, right? When your business gets to a certain point, it's going to make sense for you to build a budget, and you're going to want to build it at what we call the GL account level, the general ledger account level, meaning the accounts on your profit and loss statement, so that you can load it into your accounting system and do a budget versus actual comparison. You want to do that. Mostly, for the most part, I see businesses really do that after $500,000 in revenue, annual revenue, $1 million in annual revenue. I've seen people do it earlier. I've seen people do it much later. But usually around that point is when you say, all right, look, this is getting out of control. I got to run the business by the numbers. I need a plan. I need a budget. That's the point when you typically sit down and you've got the wherewithal and you've got the right resources to build your plan and load it into the system. I just wanted to share that because I see a lot of businesses like, you know, you want to build a plan and have an idea of where you're going from day one pre-revenue, right? That's okay. You should do that. But, you know, it's not necessary to build a general ledger account level budget if you're pre-revenue, if you've got $100,000, you got to get to a certain scale. And so I typically, much as I want to build those for clients, I typically steer them away from that because as soon as you implement a budget at that scale, it's changed. You know, it changes very quickly, and so it doesn't serve a lot of purpose. Doesn't merit the time and effort invested in building a budget. But anyways, once you get to that point, you're going to want to compare yourself to your plan across these 5 metrics, both on a percentage basis and a dollar basis, to see how you're performing versus your budget, to see how you're performing versus prior year. Okay, the graphs here at the top are these same metrics from the P&L, but you can see them year to date, so you can compare yourself to prior years and to budget. And these here are balance sheet metrics and ratios, which are done on a monthly basis. And so you want to monitor these trends to see how the business is performing. So this is just to show you the view that you can get of those key metrics. This obviously in this example is about a $10 million business. I like to point out to people that it doesn't matter if it's 1 or 10. So this works the same for $1 million business. You might say, oh yeah, but that's a $10 million business. I can't run my business like that. Well, you can if you're, you know, a $1 million business. You still need to be looking at these same exact metrics, and you need to get your accounting and reporting in order so you can monitor these metrics here. You can see in this case, it looks a little different because we actually don't have a budget built. So here's a $1 million business without a budget loaded into their system. And so we just hide the budget and don't show that. And you say, well, that's a $1 million business. I'm just getting started out. Well, here's a $250,000 annual revenue business, and it works exactly the same. So there's not this, you know, I'm too big or I'm too small. You know, you are too small when you just start out and you're pre-revenue to actually implement accounting. But once you get any kind of volume of transactions, you want to implement proper accounting so you can do this kind of reporting. All right. So I'm going to jump over to just a second. In the presentation, which I'm sure we'll share with the group when we're done, there's a couple links in there to these reports. And so just going to bring your attention to a few other things over here. Here's the P&L, cash flow, balance sheet, AR, and AP report with all the reports in it. And here's the financial KPIs. These are your high-level summary dashboard, and then you're going to want to monitor your trends. You've got trend charts here on a quarterly and on a monthly basis. The point I was making when I was talking about revenue was that you want to, once you know your top line revenue, you want to go straight to line of business. And so as you build your business, you're obviously going to have different lines of businesses for the most part. Some people are, you know, one trick pony. But usually there's a way to break up your business by what you do, what's your revenue model. And so you want to think about that as you grow your business, and you want to build your accounting processes and system to support that. So to tell you this, if I have, a total of 1.3 million for the year, well, how did that break out across my different lines of business? So that's you're peeling the onion back, right, on that revenue metric that we talked about. You say, okay, I know what revenue is. I know it was up or down, but is it up or down by line of business? And then you're going to work your way back into the operational drivers from there. All right, so now I'm going to jump back to the slide and go here. And this is really the act on part of reading the financial statements. So you have the right reporting, you know what financial metrics to look at. Those financial metrics tell you what the financial performance of the business is. I like to remind business owners that finance and accounting is just trying to reflect reality, operational reality of your business. And so really what you're trying to do with financial reporting is use that information to take action in operations, right? You guys know that. As accountants have to learn that. You guys know that just because we're running a business. I'm trying to make this business operate better. Well, sometimes accountants get lost in the numbers on the statements. And really at the end of the day, what matters is the operational drivers of that financial performance. And so this is the way to work backwards from your financial reporting to, well, what can I do about it? And so many people don't do this, and they're not able to do this because they're intimidated by financial statements and financial reporting. And so they kind of just ignore that and let their tax CPA figure it out at the end of the year to file their taxes. And they come over here and they live in this other world where they've got a bunch of spreadsheets and like a CRM of their deals, and they're looking at their bank account and they're running their business in that way. They're not running the business by the numbers. So that's the whole point of the proper financial reporting, is to merge the two worlds and let you manage your business by the numbers. So know what the financial performance is, but then still work your way back into the operational drivers. And so those operational metrics, the things that tell you how your business is doing, are going to differ depending on the industry that you're in and the company. So I'm by no means a guru or an expert in all the different operational metrics that every company or industry should have. Like, I've got a good experience with them because I run a service business. We serve a lot of service businesses. We serve a lot of e-commerce businesses. Hi, Peter. Thanks for joining. And so we've got lots of experience in these different companies and industries. We can help them identify operational metrics, KPIs, key performance indicators. They're going to help them run their business. But you've got to do that for your own business. Okay. So you got to understand the drivers of your financial performance, and then identify, measure, and monitor your relevant operational metrics. So it's not enough just to monitor your financial performance. So if you think about the exercise we just did with our 5 key financial metrics, that's where you start to make sense of how your business is performing, but it's a starting point from which you work backwards into your operations. So we started with net income. I'm going to skip that here because net income is really just the end result. It's like what happened after everything I did during the period. So we have to know that. That's where we start when we look, but we immediately go to top line, gross profit, and OpEx to determine the why of the net income. So, okay, when I'm working on my revenue and making sense out of what my revenue is, what I have to do is work backwards into, all right, well, my revenue was what it was. Well, what are the operational metrics that drove that? Number of units sold, number of customers, number of projects, number of billable hours if you're running an agency. Those are metrics that are going to determine your revenue. And so you want to develop systems to measure that, set targets for that, and then monitor your progress against those targets on a consistent basis, at least monthly. Some operational metrics you'll look at daily, weekly, a couple times a month. Obviously, that's the volume side of things. Well, then there's the rate side. What do I charge per hour or product or whatever it is? So you got to know your price per units. And so that's volume times rate to get your revenue. Well, really, that's where you get those KPIs, and then you go back one step further. Well, why do I have more or less units sold? Or why did my price per unit go up or down? So now you work your way one step back to really like sales funnel metrics like this, or operational metrics like, all right, well, how many proposals did I send? Because that's going to be how many new clients I closed, or how many people are on my site and added my product to their cart. Well, how many meetings, calls did I have? How many leads or clicks came in? So you've worked your way all the way back to the operational metrics that you can control, starting from the financial statement. And it's the same exercise for these other metrics: gross profit, expenses, cash flow. So gross profit is obviously revenue minus cost of goods sold. So it's cost that really impacts gross profit. So I got to know your cost per unit, you know, and your unit can be products, hours, projects, customers, whatever it is. And then you work your way one step further back into the operational side of that. All right, well, that's my cost. Did it go up or down? And what drove that? Did my error rate increase? You know, do I need to train my team better? Do I need to implement quality control, QC? Do I have a lot of waste? Do I have a lot of maintenance on my vehicle fleet? And that's increasing cost of delivering my service in the field. So you want to say, all right, well, I better monitor my maintenance per vehicle, or my maintenance per project, or whatever it is. How many trips are you doing in your vehicles per day, your jobs per day, billable hour percent for agencies? Like, I've got this team of people working. I got to keep their billable percent at a certain level. Otherwise, my overall cost is driven up and my gross profit comes down. From expenses, which is also known as operating expenses, OpEx, overhead. You want to think about that as a percentage of revenue and gross profit, monitor that metric over time and versus your budget. And then on the OpEx side, they're not necessarily direct costs. So it's not directly, that's the whole point, right? They're overhead. They're not direct costs, which are cost of goods sold, which form your gross profit. They're indirect costs. So there's not a direct relationship necessarily with sales, but there's a lot of things you do to monitor the operational metrics on overhead, like you can see here. What's my advertising spend per click, right? Sales and marketing is a big part of your overhead. And so you want to measure your return on investment in your sales and marketing with metrics like that. You can do all sorts of things on the OpEx side: travel cost by night, total cost per employee broken down by wages, taxes, benefits. You want to monitor your facilities costs. You can do it on a metric basis, like per location or per square foot. When it comes to cash flow, you want to monitor. So net working capital is another financial metric which we can talk about. That helps you monitor the health of your cash, your current assets, essentially. And if your cash is up or down relative to your profitability, that's when you're going to dig into, well, am I collecting from my customers before or after I deliver the service? What are my collection terms? So that's where the customer prepayment and the billing approach comes in, and your accounts receivable and collections policy are going to impact your day sales outstanding. How long does it take to collect from your customers? You also want to look at the liability side of things. Am I delaying as much as possible my accounts payable? Am I paying on time to keep my vendors happy, but I'm not paying before I need to? And so those policies are going to impact your cash where it differs from net income. Okay, I'm going to stop there and take a deep breath and open it up for questions. I've got a couple more slides about accrual accounting, because that's a real common topic with business owners, the whole accrual versus cash, and a lot of the topics we're talking about here. So I have that to get into, which I love to share with people to try to educate people on that. But I'll stop and leave it open for Kevin, if you want to take over or want to open it up.
Yeah,
for
well, what I was going
Q&A.
to say is I think that the thing that, I mean, so there's lots of different, I mean, like I said, this is one of my weakest areas in my business. And I'm always like, oh crap, I've got a question about that. I got a question about this. What I think would be interesting to do is I'd like to see if we do have some questions. I do think that one of the things that would be interesting is And, for everyone else, I sent a couple of texts out just for people that are watching right now, just saying, hey, I'd like to get your feedback about like some of the stuff that we might do. You've given us like a good overview of things, but some of it's like, hey, I really want to workshop this stuff out. Like the questions go so deep into the weeds that it might be a little bit difficult. Let me ask you this, just really simply, for the entrepreneur that's at that point that you're mentioning earlier, you said around $500,000 to $1 million, and everything's kind of chaotic, and they're in the process of trying to get a wrangle on everything. What would be the first step on taking a step closer to the perfection that you just pointed to with some of those reports and stuff like that? What's the first step?
Let me say it like this. I think that the first step is to analyze and interpret your financial performance on at least a monthly basis. And I say it like that because what I'm saying is make it a habit, make it a discipline to look at your business performance for the month and for the year to date or whatever the period is monthly. Do it every single month. Now, there's obviously, okay, well then how do I do that? Okay, well, step one is typically to implement some sort of accounting software. That can be step one. You can also do it on a spreadsheet if you're really just starting out, and just keep track of your income and your expenses by date, look at it by month. So if you're really small and just starting out like that, you can do that. You can implement an accounting software, like we use mostly QuickBooks Online with people. It's got different plan levels. It has a cost. If you're trying to do it for free, there's free options out there, right? There's Wave, there's Zero, which is lower cost than QuickBooks, and there's a number of other free options. So do that every month. And if you say, well, how do I do that? Well, implement some sort of tracking of your income and expenses. And that'll be the first step to get you there. Because I can't tell you how many businesses because this is kind of what we do, right? We implement this for people and we push it into their face every single month and make them manage the business by their numbers. I can't tell you how many entrepreneurs and business owners we started working with that didn't have a clue about any of these metrics or what they were when we started working with them. But by that discipline of looking at it every month and trying to understand and make decisions based on their numbers, over the years, they build this expertise, and all of a sudden I've got them telling me about what happened with their gross margin and their overhead. And I'm like, you didn't know what any of that stuff meant, like a year ago.
No, I know. Well, and for those of you that are feeling that, and I know that I see that in myself too, there's a book called The E-Myths Revisited, where there's three different roles inside, three fundamental roles: the entrepreneur, the manager, and the technician. The technician's usually, the person that knows how to build the product or do the service. The entrepreneur is typically the person who's driving sales and also envisioned the startup or the company in the first place. And the manager, usually you get to, you're natural at one, you learn how to do the other one in a pretty good way, but usually you have to find someone else for the third part. And so that's natural for those of y'all that might be feeling this, as I sit here and saying, wow, I really need to learn more from Eric. John Rodgreb had his hand up. Let me actually see if I did.
Thanks, Kevin. I would just add one minor thing and see if Eric agrees with this: is do it once a month at a minimum, and don't do it too often. I've worked with organizations that are driven, once they get the software in, they're driven by the numbers, they micromanage them day to day. And in a small business, you just don't get enough aggregation of that data to really judge trends if you look at it every day or sometimes every week. So you got to be careful that what you're looking at today is applicable tomorrow and next week.
Exactly. It's interesting, right? You don't want to overmanage anything. You don't want to undermanage it, but I like the idea of having that. One of the things that I would like to get a sense of too, for if you're watching the stream or watching the recording or live right now, is send feedback directly to me if there is interest in actually having like in the community, we could actually, one of the things that we might be able to work out with Eric, if there's interest, is to have Eric come in and, for maybe it's X number of weeks or over, a few different months, just to instruct us, hey, take this next step, take this next step, take this next step. Where if we have enough of our businesses that are, say, like as an example, TechCrunch runs on QuickBooks Online, runs on QuickBooks Online, maybe we could actually have the primers where we go in a little bit deeper on that. Denise raised her hand. Let's hear from Denise.
Okay, I wrote the question down. Eric, this is fascinating. I am in ed tech. I'm a retired educator. I worked in what you would call nonprofit. So as a principal, I got a budget. I had no control over it other than if I got extra Title I funds. Everything else is already budgeted for me. But I had a lot of ideas, and I knew the people in the special ed department that got a lot of grants. And so when they would get extra money, they'd call and they say, okay, what idea do you have now that you would need some money for? So then we would process that. But I don't know, like, I didn't even know what KPI was until you just told me. So what advice would you give ed tech teachers who are entrepreneurs by nature, when they just love doing what they're doing, but they don't have, like, they don't even know the questions to ask, and they wouldn't know who to ask. They don't even negotiate their own salary. So where would you have us begin?
I don't have a great answer, Denise. I wish I did.
Yes, Kevin, we need a workshop.
my mom's actually a principal. Well, she's been a principal her whole life. She retired last year, and I've had plenty of those kind of budget conversations and how all that works in the public school system, and it's so different than the entrepreneurial environment. So I completely appreciate that. I give you the same advice of getting your financial reporting set up to where you can start to educate yourself by looking at it at least monthly and make sense out of your business, because that's going to drive you to the questions that you have, like, okay, well, what does gross profit mean? What does KPI? And then you'll start building that on. So it's the same advice in terms of actually where to start to get that information. I don't have a good direction, because to me, it's like, I feel like I was born with that because I was doing accounting in high school, like competing in the statewide competition. I can't even know what it's like to go back, but I know there's some really
crazy
good.
to even think about that.
Yeah, I was really cool. But I know there's lots of really good accounting and finance 101, accounting and finance for non-financial, non-accountants kind of webinars, workshops, things out there. So you might want to start with that just to start wrapping your head around some of the terminology and how it's used.
If that's something that you can make a recommendation on, whether it would be, from PlotPath and yourself, or one of the things that I think there is a desire for, which is one of the reasons that when we started talking, I was reaching out to you, is there's a lot of individuals that are perfectly capable about getting a business off the ground, getting $500,000 to $1 million worth of revenue going, but don't have the financial literacy. Especially, or they might have financial literacy at the house, but not financial literacy for really building a business from a standpoint of what you just, the 5 items you just pointed to say, you should know these 5 things. So if there is something, whether it's your organization or someone else's, I would love to have you make a recommendation and say, hey, go do finance 101 over here. And then this next step, and then this next step, because in the in the community site as well, I think that there's a lot of especially with the hundreds of people that are not represented on our program right now. I know that there's interest. It's about figuring out, and for those of us that are blind, we're looking for the one person who can kind of direct us towards the next step on learning about that sort of stuff. It might be interesting to have you step into it.
Yeah, I mean, I'll look around a little bit at those 101 kind of opportunities, and I'll share some recommendations with you, Kevin.
When I'm gonna try to get Eric to I mean, I think Eric already is on in the community. I think Jello's already invited him into the community. We'll tag him on the VO weekly time. So if there is follow-up questions, especially for, you know, at some point later, if you have questions, we'll actually tag him on that posting, or Jello will. And so part of what we can do is make sure that there's an opportunity to ask, you know, over the next couple of days or something like that, some follow-up questions out of this. Because I do think that there's interest, and I know you had some other things you were saying, hey, let's go into these deeper things. I think that part of what would be interesting is to figure out maybe a follow-up, you know, class or something like that we work out. I'm getting nods from Denise. I'm getting nods from Daniel. So I see both of them nodding about that. They're both in the studio audience. So yeah, what we can actually do is I'll talk to Eric about that, and Eric will be thinking about it. He's working with quite a number of different companies, you know, in the Americas right now, mainly in the United States. So it'd be great to actually, you know, draw upon his knowledge. And, you know, he could even tell you some of the horror stories of dealing with me back when TechCrunch is going through a particularly difficult time.
We don't have to bring those up, Kevin.
Yeah. Let's just say that.
But no, I'd love to help. I'd love to get involved and share and figure out how to set people on the right track to, you know.
Yeah, well, and
properly.
I think that that's the thing too, is because the knowledge that's out there has got, you know, it's like got American style marketing all over it. It's not really well accessible. There's so much spamming of stuff around finance, like finance and investment and stuff like that, that it's really confusing. And, you know, in the spirit of what the venture outfitter is supposed to represent, for everyone that hasn't really heard me talk about this portion, you know, there's a handful of people that I've learned from. There's actually, the last time I made the list, there was 12 people, Eric being one of the 12 that in different areas of business, not just finance and not accounting, but that I want to learn from. And so part of what I'm actually hoping that we introduce together is exploring that together. I know we've gone over a little bit of our time. Eric, any final words you'd like to say before I close up today's session?
No, I mean, thanks for having me. I agree with what you're talking about. There's a whole world of financial accounting information. This is high level, and you go into different topics and subjects. And so to the extent that you guys need support on that as part of the venture community, we could pick particular topics and go deeper on them. And Daniel was just recommending, you know, some coaching on implementing this and specific software. Like, I can share that. Our blog is a resource, you know, it's mostly me, the good articles of, you know, my labors of love that I've written over the years. And so that's a resource. You can check out some of those articles to get some basic learning. But nothing else, Kevin. Thanks for having me. I really appreciate it. And I don't have a hard stop. So if anybody does have a question and wants to hang on, happy to stay on. Otherwise, I'm available over email.
Well, yeah, what we'll do is we'll do this. We'll go ahead and I'll do a couple of closing slides. And for anyone that wants to stick around for a little bit later, we'll be able to do that. But from a standpoint, let me thank Eric for this. Daniel, your question about just for everyone else that hadn't seen the quote, it says, it would be, Daniel said, would be very valuable to get some coaching from Eric to start implementing this, to know what software he recommends and the recommending order of things to get there. So part of what we'll do is, for anyone that is in the community that would like the same thing, just so I don't get a bunch of emails to me saying, hey, connect me to Eric. Part of the way we'll do this, and one of the reasons that we're using the community software, is to say, Jello is going to take the video of today, and he's going to post it into the community area under the VO Weekly channel. And on there, he is going to tag Eric, and he'll, I'll ask him to tag Daniel as well. Daniel, I don't know if you're already in the community, but certainly what will happen is Jello will actually make sure that anyone that wants to be, that's especially in the studio audience, can go ahead and get on there. And the conversation will start there. Now, you guys can take it lots of different places, but this way you know that you have immediate access to each other, where you're not having to rely on me to put people together, because my mailbox is a mess. You guys always know this anyway. It's getting better. It's getting better because we're starting to use strategies like this to connect the community. With that, thank you, Eric. I'm going to go ahead and I'll bring up a couple last slides for people that that are here that would like to get involved. For those of y'all that are involved in the or if you're not yet involved in the tech ranch and you saw the stream or you saw the recording and you want to get involved, part of the way to do so is to go to techranch.com/connect. At this URL, you can sign up as a mentor into our mentor program. If you have scar tissue to donate to other entrepreneurs, you can actually join from the standpoint onto our newsletter. You should make sure you do that because there's a lot of announcements that during these programs, even if you're participating, a lot of times we're having so much activity happening that we're packing it into the newsletter. There will be more information about our other programs if you want to apply to be into the community. Like I said, the community really, applying into the community to get into that first level is free. To get to the venture outfitter, there's a small charge, not a lot, but a great place to get involved there too. And if you want to be a country manager, there's a bunch of other activities that you can sign up there on the techranch.com/connect. But in closing up, it's always an honor to be a part of a community of practice of entrepreneurs that are driven by vision and values. Let's go change the world for the better together. Thank you all for your time today. Thank you, Eric. It's great to have you schooling me again as, even myself as an entrepreneur, I need to work on this stuff. So I'm glad to have you here. Definitely looking forward to learning more from you myself, and we'll make sure that that's accessible to the community as well. Y'all take care for today.